Hi, Corey Moser. Just giving you a quick update today. Since the US and Israel have begun striking on Iran over the weekend, the markets have been closed, and there have been some questions on what will happen to mortgage rates as a result of these strikes on Iran. Well, whenever there are geopolitical concerns, such as strikes or wars or retaliations, things to those effect, it can generally cause concern for investors, which means they would move their money to safer shores, which would be bonds. Now, as bonds are purchased, the treasury prices go up. And as treasury prices go up, your treasury yield, your 10-year treasury yield will go down. And mortgage rates typically follow the 10-year treasury yield. So as they drop, mortgage rates should drop as well. Since the strikes took place over the weekend when the markets were closed, there's a good chance that tomorrow morning on Monday we'll see some change with rates, and in the short term, they'll most likely go down just a little bit. Now, the long-term concern could be inflation and the cost of oil. So those kinds of things can drive rates higher. And usually most investors they move in a knee-jerk direction. So if they feel like there's concern, they purchase those bonds very quickly, selling off their stocks. But as they realize that things may be a little more stable than they thought, they'll put their money back into stocks, which drops the price of the treasury and those bonds and raises the yield on those treasuries as well, which causes rates to go up. So chances are mortgage rates may dip just a little bit tomorrow. I don't anticipate a big drop, but long term, we could see mortgage rates go up. So keep that in mind if you're considering purchasing or refinancing. And God bless all those who are currently being affected by these strikes. And we have prayers and thoughts going out to people everywhere, as this is definitely a tumultuous time. Thanks for joining me, and we'll talk again soon.